Good afternoon. My name is Scott Redler, Chief Strategic Officer. Welcome to today's recap and look ahead. Here we are. Pretty big down day. We walked in today. Futures are up for the fourth time. We've talked about how unhealthy it is that the last three times they've opened the futures up. People sold right into it. Not the exact formula for some kind of tradable bounce. We had pivots to watch. The question was, could we get above yesterday's high and stay above it and figure out what resistance would reject the bounce, because people pretty much figured out all it was an oversold bounce with lower prices to come, especially considering that every sector is well below the 2015 lows, or most stocks besides the SPX and the spiders. So why wouldn't they get there? That's why the trading's been so lethargic to the upside with no power, because big money has been put to work, because you had to at least test those lows while everything else capitulated below. And let's just take a look at what I'm talking about here. If you look at the chart of the SPX, you will see, here is the SPX cash. This was your flash crash low. Here was your double bottom in October, and this is where we are now. Okay, you had a little red dog reversal here, some follow through, and then today, fully engulfed. Okay, so now tomorrow, this is what we have. You have 1886. And then you have 1871, and then you have the flash crash low, 1867. So we're about 20 handles away from this area. Okay. Real quickly, a lot of guys were telling me how they had a great day because they used the red dog reversal to the downside in a lot of sectors and stocks, one of them being the spiders. The pivot today coming in on the spiders was 190, I think it was 194.55 if I remember it. And basically, it started above there, and what was the high today? The high was 194.86. So if you were shorting when it went below this and you went to the bathroom, or you said, I'm going to come back later, you had a hell of a day. If you tried to play it long and it got below this and you got out, you did just fine too. And then, if you didn't get out of your longs there, once we went below the prior day's low, which was 191.14, you definitely had to be thinking a lot more bearish than bullish. Like here, you had a low, a higher low, whacked. So now tomorrow we'll see we have a 188.38 is the pivot. You have 186.93, and then you have the flash crash lows here, which is 182.40. So we'll see how we open tomorrow. Let's hope they don't do another gap up tomorrow, because all that keeps doing is putting off the inevitable. And I talk about my rules all the time. Well, here is when the SPX went below the 200-day moving average. It went below the 8 and 21-day higher, like 205. This was here around 204. So if you got out of risk because you closed below the 200 days, remember when we closed below the 200-day here, woo! You saved yourself a heck of a lot of pain in some of your long-term accounts or your swing accounts. So with that said, we'll see what we do tomorrow. Again, you go to the spiders here, and long-term, to be honest, it's not looking so hot, considering, again, here's your 200-day, besides that one spike below, now we're back below, and you have this, you have this support level here, and then you have one right here. But all in all, this, this looks like, one of the biggest rounding head and shoulders top pattern I've seen in a while. So, let's hope this area holds. If not, we'll figure out what's next, and we'll just play it by ear. It is what it is. The trade changed. We talked about the trade changing, well earlier than today. I think last Wednesday is when I gave him my Redler All Access, the big shot across the bow, saying, look, by the way, look how this trend got broken, stayed on the right side, and now we'll see here. Remember that note? It was, I think, last Wednesday, actually a week ago, when I got hit. I think I was long into the hydrogen bomb scenario, and I got stopped out of my stuff, and I was like, you know what, this is it. You have to change. Things are broken. You have to be very careful buying a dip, and you have to get good at that H cell setup, and maybe even shorting the bottom end of the H, because momentum is working to the downside, not just hitting support and bouncing off. Well, anyway, that's what's going on here. And we'll see with the oscillators at minus 88, I think some people probably still went out short thinking they want to have a head start on the day, and maybe they get that big down open. For me, I'm just going to go out flat. If we gap down, I feel like tomorrow will be a day where, it could be a good tradable spot. May not be it. Doesn't have to be it to make good money. But if we open up again, it also could be good, because every other time you could have been shorted that and made, pretty big ranges as well. I thought today the Russell would get a little bit of a bounce, maybe the XLE. They started the day kind of strong, and they both got hit hard. You look at the Russell. The Russell, by the way, is well below, the lows. So leading lower. Here is that pivot. There is your 2015 low. So we're well through it. And lots of trends have been broken here. This was one trend right there that got broken with the 200-day. Look, if you sold this when it broke the 200-day and stayed below, even waited for this bear flag to be put together, you were out of the IWM around 115, not down here at 100. Jeez. So, at this point, there's really, just, I guess, a few points of reference below, but who knows what it's going to happen at this. I think you could just, take today's low and, if there's a bounce, play for a scalp. But again, gap and go to start the year below every moving average, well before other things. That's 115, guys. That's 15 points you saved yourself from being involved in a swing long in the Russell. And then also what's even more bearish is the 200-day was above those. So, write this down, write down 99.65. We'll see what happens tomorrow. If we get a move below it, maybe you get a tradable bounce, maybe a red dog reversal, but you better be quick and nimble. I remember, I was actually buying, I think 114s today, and I sold 114.38, and then when it went red, I said I'm out. That was my rule. We open up, you go red, you get out, especially when you play, bashed sectors. If you look here at the 5-minute, you could see, how to basically respond to that. Like here was, let's see, where's today's open? So this was the open today, right? Let's see, this was yesterday, the low. Here was the open. I think I bought a little bit into it. And then, once it went red, I think right around here, which was yesterday's low, I just got out of the way. Or just red, I got out of the way. And then if you gave it more time, you either had this to get out of the way or you had to get out of the way at yesterday's low. And if you got out of the way at yesterday's low, you still saved yourself $2. Or if you look to get short. But for me, I bought it near the open thinking maybe we get some kind of bounce with the news in cyber, the news in FireEye. Made a little bit of money and then lost a little bit of money and then I stopped. Thank goodness I got away from that. The XLE tried to bounce early on and same kind of thing. You had a gap up here, weak sector, came in, made a lower high, and then this could have been your out to fill the gap. Okay, then it came in, got crushed, another lower high, and then just pretty much trended lower. And look at this. This sector has been below the 200-day for, I don't even know how to tell you how long. It's just to show you that you don't have your hard-earned money in this thing. 91 could have saved you a heck of a lot of damage if you didn't have it as an investment. But I don't think anyone does. But and then talking about relative weakness, this already broke those 2015 lows. So again, all these things broke those 2015 lows. That's what kept me tentative on trying to be too long with the S&P above its. And who knows, it might get to the 2015 lows in the S&P and flash below it because too many people think it might bounce there, and that's too cute. And that's when maybe you'll see the real, fear. Today, one of the keys that I saw, that helped me have risk off was one, Netflix that has been stronger, was down with a downgrade, $4.50, into the support from the Redler All Access note. I talked about, I think 111. I'm like, 111 needs to hold for this to be any good. Well, didn't hold. You look at Netflix. That's why you use levels. Netflix, looked somewhat decent, okay, after this, wide range bar, right? Here it was flagging. The reason why I came up with 111, I don't come out with these numbers out of my tush, was because this was 50% through the wide range bar, so that's where it had a hold, and that's also where it's been holding. So if you gave it to 111 and got hit it out, you're probably like, oh, that sucked. But you know what would really suck? If you held all the way down to, the 106 area versus 111. Some guys probably even made some money short. Also, what gave some guys clues was Amazon wasn't really, looking good yesterday. I took it home long, I sold it up 5, and then it didn't rally and never got back above the high of the first 5 minutes. And today was the first one red. So it showed you, and Facebook went red, that high beta tech was being for sale today. You go to Amazon, and I talked about it getting into the gap from earnings to potentially buy, but it did it too early in the day, so I didn't buy it. Well, here it's in the gap. Gap gets closed down into here, and now, we'll see what happens tomorrow. You have this moving average and the 200-day. I guess maybe it gets to the 200-day. I don't know. This will be the first stop. So for tomorrow, we'll see how we open. But you have a pivot at 579 now. Remember this? Breakout failure. That's distribution, not accumulation. And this is also when it lost the 8 and the 21-day with a gap, so momentum gone, and the 50-day. So now here you have this pivot. Then you'll have 561, and then 531 is the 200-day. I'd love to see a fast move to the 200-day, because usually a fast move there gets bought first. You know, same thing with Facebook. Facebook, you know, big engulfing bar, talked about, you know, not being a buyer on day 3, and went red very fast, and now engulfed this whole area. And here's your 200-day, right at 93.50. So, you know, a move down to here tomorrow might be worthy of a spot. But again, you got to be careful. These things have had huge moves, and you know, one of the reasons, you know, I think guys are not so upset is because this did close below the moving averages here. Okay, gave you a little viable try, and now, you know, this will probably be the next spot. But again, you know, be cautious. I remember I bought into the flash crash there, and it took, you know, it took a little time. But anyway, you know, the 200-day, you know, should be some kind of support for a trade, and then you have, you know, the pivot. Google, same kind of thing. It's just getting into the earnings gap, so you know, be careful. This went red last, played catch up. Some guys were looking at it like, hey, why don't I short Google? Because Amazon, Netflix, and Facebook are down. Makes a little sense, and boom. A lot of resistance failed here. That's why this morning I was like, you know, you're playing with a little fire, trying to buy these things on day 3 to get to resistance 2 when, you know, we're in a weaker tape. But anyway, you know, here is your next support, and then the 200-day is all the way down here. I'm not saying we get there tomorrow, but I'm just saying in general, you want to know where that is and if it moves up at all. Oil played around with 30. I'm not sure where it settled. I think it settled a little bit above 30. And that's really it. You know, we'll see what happens tomorrow. You know, 3 up days, not healthy, that each one of them got sold today. You know, you had some clues not to get caught long. You had high beta go red first. You had Netflix breaking a key level, and it was one of the best or better looking stocks out there. You had Amazon also weak. Then you had most sectors below those pivots from last year. So again, made you think, why wouldn't the spiders get there and the SPX get there? And now we're close. So we'll see what happens tomorrow. Hopefully you made some decent money short or didn't get caught too long today, and tomorrow you live to fight another day. See you then. Have a good night.